Here's the hard truth nobody tells you when you start private equity recruiting. Headhunters don't owe you callbacks. They owe their clients certainty. If you've stopped hearing from them, it's not personal. It's a signal problem. In their eyes, you're no longer the candidate most likely to close cleanly. Today, I'm going to show you exactly how to flip that signal back in your favor, how to re-engage with the right people, and how to get momentum again, especially in the European market, where a small set of firms control most processes. I'm Stefan, co-founder of Break Into PE. I started my career in investment banking at Morgan Stanley in London and then moved into private equity at HG Capital. Over the past years, my team and I have coached hundreds of candidates across Europe into funds like KKR, Blackstone, Bain Capital, EQT, HG, and many more. In today's video, I walk you through why headhunters go quiet, how their incentives really work, what you can do in the next 30 to 60 days to make them care again, and the exact messages that reopen doors. Let's start with how the game works. In European PE recruiting, headhunters are the key gatekeepers. A handful of firms, think Kia, Walker Hamill, Dartmouth Partners, PR, Blackwood, Arkidston, Nordbridge, cover a large share of roles across London, Paris, Frankfurt, Madrid, and the Nordics. They are paid roughly 30% of your first year cash compensation when you sign, and they owe the fund a replacement for free if you quit within a short window, often around 6 months. That single detail explains their behavior. They optimize for candidates who will both get offers and stick. If your recent history shows near misses, withdrawals, or uncertainty about fund fit or geography, your close probability drops and you slide down the call list. And this is why going deep into processes and not landing an offer hurts more than people expect. The headhunter sees you as someone who interviews well enough to be put in front of partners, but not well enough to get over the line. In a market where each mandate might have 10 candidates slotted for first rounds and only one seat, they will prioritize the candidate who looks easiest to close. It's not spite, it's expected value. You have to change the math they're doing in their heads. So let me give you a story you can copy. A client of ours, let's call him Daniel, was a second-year analyst at a strong but not top bracket London bank. He had been through 3 final rounds over 8 months with the same 2 headhunters. Each time he reached the last interview, each time he lost out to candidates with clearer sector fit. He hit that silence you might be feeling now. Emails got slower, inbound calls stopped. When he came to us, we didn't start by spraying more processes, we rebuilt his signal. First, we tightened his narrative. He was presenting himself as open to sector, which in Europe reads as risk. Funds hire for long-term platform needs, software buyouts in DACH, healthcare roll-ups in France, consumer deals in Spain, and headhunters listen for conviction. They want somebody who knows what they're going for. So instead of portraying generalist preference, we decided to only focus on mid-cap funds with a B2B SaaS focus, given his prior background. Second, we manufactured evidence. He built 2 short, fund-specific pitches, one on a German B2B SaaS target, one on a UK payroll software consolidator with a clear thesis, underwriting case, and 3 value creation levers. He could talk through in 10 minutes. He recorded himself and refined delivery until the story landed in one breath. Third, we gave headhunters a reason to re-engage. He reapproached a different headhunter in London for a role that better matched his new story. Within 6 weeks, he had 2 final rounds and landed a written offer. So what do you do if headhunters don't call you anymore? Start by resetting your profile around 3 levers you can control quickly: clarity, currency, and credibility. First up, clarity. Clarity means picking up a fund size range, geography, and sector you can defend out loud. In Europe, the generalist label can work at some funds, but most mandates are implicitly anchored. Nordic consumer platform, German software, Madrid or Spain business services. If you're multilingual, say so and say why it matters to the deals you want. But if you've done a relevant deal, make that deal the clear center of your story, not the 5th bullet on page 2. And currency means your material is live. Most candidates stop updating their CV and case pitches after an initial recruiting sprint. If the last thing you can speak deeply about is from 9 months ago, you feel stale. Freshen your front page with the current deal you're actually living. What the underwriting looked like, were the thesis correct or strengthened, the specific diligence workstream you owned. If you don't have a live sponsor-backed transaction, build a short, high-quality pitch on a target aligned to your chosen sector and geography. 3 minutes, 1 page, 3 levers. You're not trying to outbank anyone, you're signaling investor thinking. Credibility is where references and optics matter. The headhunter is assessing whether a partner will like you in minute 2. Make it easy. Your equity story and pitch should echo the same sector and geography anchor as your CV. If English isn't your first language and you're targeting London, practice crisp, concise delivery. If you're targeting a local language market, demonstrate fluency without being asked. In continental Europe, language is not a nice to have. It's a risk filter. Once you've reset clarity, currency and credibility, you need a re-engagement plan. Here's how to structure the next 30 days. Start with 1 or 2 funds where your story is strongest, but do not start with your absolute dream fund. You're rebuilding momentum and you need something to reignite the fire. Approach 1 additional headhunter you haven't burned cycles with, aligned to your sector and geography choice. When you reach out, do not send a generic message that you want to break into PE, but have clarity on what you're looking for and why. Your message should read like this when spoken aloud. Hi Sarah, quick update since we last spoke in June. I've since led the financial model on a sponsor-backed vertical SaaS deal in DACH, and I've spent the last 6 weeks sharpening my software investment case. I'm now focused on software buyouts at mid-cap funds in London or Munich, and I've prepared 2 short pitches to show you how I think about underwriting and value creation. If you have mandates in that lane, I'd love to catch up this week. Keep it calm, keep it specific, and if you do secure an interview, immediately confirm availability and logistics in the same email thread. You have to be efficient, not too many back and forth. And headhunters love candidates who reduce friction. There's a second path that can reignite headhunter interest even faster. Create heat via a lateral move. If you can switch from a second-tier bank to a stronger group, or from a generous consulting assignment to a diligence-heavy sponsor-facing seat, do it. The European market is smaller and more networked than the US. A single well-timed move onto a classic PE coverage team, into like a top investment bank, and like one of the top consulting firms if you come from more of a boutique, can completely reset how you're perceived within a couple months. The point isn't prestige signaling for its own sake. It's proving that your day-to-day now mirrors what funds need in order for you to join that fund. All of a sudden, you're in the pool that they are recruiting from. So let's talk about the elephant in the room. What if you've already been in front of the same headhunter for multiple mandates and never closed? You don't need to avoid them forever, but you do need to give them a reason to believe the outcome will be different this time. That reason can be an offer from another process. This is the best. But otherwise, it can be a demonstrably stronger story with like more experience. It can be a change in geography that aligns with your language network. It can be a reference from someone who calls them to vouch for you. But what it cannot be is, I think I'll do better now. I've done a bit of prep. That's hope. They need proof. Another nuance. Fund loyalty and cultural fit weigh heavily. Because many European funds are smaller and more partner-centric, headhunters screen hard for early attrition risk. This is why I'm open to any fund size in any city sounds risky. Pick your lane and own it. If you truly are flexible, fine. But present flexibility as stage preference, not randomness. First choice, London software mid-market. Second choice, German software given language. Third choice, broader business services if the investment style is similar. That shows judgment, not drift. So let me arm you with 2 pieces of language you can use immediately. When a headhunter asks why a specific fund, don't say, great platform, strong track record. Say, I want to work somewhere where I can do 3 things. Underwrite recurring revenue B2B software with moderate leverage, roll up adjacent modules through buy and build, and sit close to management post-close. Make it specific. Know what you want. Your last 2 deals, AlphaSoft, Beta Ledger, if you speak with a fund. Hit that pattern. So again, I can help on the data side. In the first 100-day plan, I already have some thoughts what you can do, which is ABC. So when they ask why you didn't close previous finals, also don't blame the winner. Own the gap. I didn't show enough sector depth last spring. Since then, I've led the cohort analysis on a vertical SaaS deal and built 2 pitches that forced me to take a view. I can show you delta in 10 minutes. This is what confidence sounds like without bravado. If you're watching this thinking, poof, that's a lot to rebuild, you're right. But it is rebuildable and fast. And if you focus on the few moves that can change your perceived close probability and you have the right partners. Clean up your story around one sector and geography. Put fresh, fund-specific evidence on the table. Secure one process, any process that proves the market is engaging. Use that heat to reopen with the headhunters who went quiet and then execute the interviews like an investor, not the candidate chasing a stamp. Before we wrap, let me quickly recap the crucial points so they stick. Headhunters in Europe optimize for certainty, not potential. If callbacks stop, it means your current signal says low chance to close or high chance to churn. You fix that signal by narrowing your positioning, refreshing your evidence and creating heat. Ideally via a real offer, otherwise via credible proxies like current work or strong references. Keep in mind, a small number of headhunters control most mandates across the continent, so we cross paths multiple times. Manage relationships with honesty and progress, not volume. And remember the European specifics. Language, geography matter. Sector conviction matters. And hiring moments are more scattered. Use that time for your re-entry. If this resonated, tell me in the comments what else we should cover. As always, if you found this helpful, hit like and subscribe to get the latest insights. And if you want tailored support, go to breakingtop.com and book a free consultation. We look at your situation and give you a concrete plan to get momentum back. You don't need secrets to land offers. You need to show up as the person a partner can trust on Monday morning. Thanks for watching. I'm Stefan from Breaking2P and I see you in the next one.